Let's take a look at what's going on with Dogecoin today, guys. All right, so in the last couple videos, we were watching this falling wedge pattern, and we broke it going to the upside. I was watching resistance, resistance, resistance. As we're going down, we're looking at the tops, waiting for us to. So we look at the tops, we form a line. If we break that line going up, then we're changing direction. We started changing direction, going to the upside. When we're going up, we're looking at the bottoms right here, and that gives us that line, something like that. If we break that line, then it could be changing direction. But when we start breaking the line, I also like looking at the top and I like looking at the bottom. And if we break the top or the bottom, then that'll give us confirmation if we're going to continue to go down. This was the first signal that we might be going down. If we break that support right there, then that's the second confirmation that we're going to go down, at least in the short term. And then if we break the top, then it could have been a fake out, something like that. So we started to head down, and then we started to form this trend line. So when we're going down, again, we're looking at the tops, and we form a line, something like this. And if we break that line right there, then we can start looking at the same thing. We'll look at the bottom, and then we'll look at the top. If we break to the top, then that could mean this could be in the first signal that we might be moving up. If we break that top right here, that will be confirmation that we're going to start moving up. So that's basically the stuff that I'm looking at. And if we start heading up, I'll be looking at the next Fibonacci retracement level to see if we get resistance on it and start like getting pushed down from there, or if we could break 185, start pushing up, then we could start targeting the next target to the next Fibonacci retracement level to the upside at .248. So that's pretty much what I'm looking at. What was the other thing I was gonna? Oh yeah. Let me go ahead and adjust this. Okay, so we had this falling wedge pattern like I was talking about, but we came up, we found resistance. Okay, so a falling wedge pattern, usually the targets would be the previous resistance is. Ultimately, the top of the falling wedge pattern would be the target up here. Like I said, we have resistance and then we have support. Support gives us those two lines. We're kind of going down, we're getting tighter and tighter. We break the resistance. Usually the top of the falling wedge is the target. Well, we came up, it's not always the case though. Sometimes you'll go to like the midpoint and it'll kind of like fade out and start going down, kind of like we did here. It wasn't perfect, but that's kind of what happened. So we had resistance right here and we started heading down, right? So what we have is resistance and resistance. Therefore, we have a new trend line. So let's go ahead and reset that, or let's adjust that line, should I say? So we have that resistance right here and then resistance right here. Looks like a falling channel pattern. So we're in a channel bouncing in between these two trend lines. Until we break this resistance right here, then we're definitely trending down and we're bouncing in between these two trend lines. Once we break that resistance though, then that could be the start. Then we can start getting a little more bullish again. And what I would do, let's go ahead and delete this one. Let's go ahead and delete this one at least. And we could delete this one too, because like I said, we were going down, we broke that trend line and we started heading moving up. So once we break the trend line, we could kind of delete it and start looking at the next trend, and the next one would be something like this. We'll look at this on the 1 hour time frame too though. But first, the channel pattern. So we have resistance, we have support, we have support. So it's like I said, we're bouncing in between these two trend lines. Once we break this resistance line at the top, going to the upside, maybe right here, maybe we have to do something like this and then break it again. Do something like that. I don't know. We'll see. If we do, we could just be trending down still. And we could, it's not guaranteed to break to the top. We could also come down here and break to the bottom and get even more bearish. But if we do break that top, what I'll do is drag from the top to the bottom. And even if we broke to the downside, I would drag from the top to the bottom of the channel and then drag this to wherever it breaks that trend line. So let's say it continues to like kind of go like this and we break it somewhere around there. Hold on, my watch is going off. So like I was saying, if we break out, then I would drag this to wherever we break out, and then that'll give us a target, the top of that, the top of the top to the bottom. Okay, so we drag from the top to the bottom, drag it to the breakout, and that'll give us a target, maybe 19 cents. I don't know. We'll see. We have to wait and see where this actually breaks the trend line. It could do it down here. It could, I don't know. It just depends. That's what we're kind of looking for, though. Same thing goes for the downside, though. If this came up, found resistance right here, and started heading down, and we actually broke that trend line going to the downside, what I would do is use this also as a shorting target, something like that. You know, wherever it broke out to the downside, because we're looking at the top to the bottom of the channel. If we break it to the downside, it'll look something like this wherever it breaks out. If it breaks to the upside, then it would be something like this, and then that would be our target. But yeah, it does look like we're in a channel pattern now. Okay, so going back to the trends, because that's a lot of what I'm looking at right now. Like, I've just been looking at the trends basically. Like I was saying, when we're going down, we're looking at the tops, and then when we're going up, like we just broke here, let's go back. So we had a downtrend. We broke this trend line going to the upside. So now when we're going up, we're going to be looking at the bottoms, something like this. And we're going to be waiting for it to break, kind of like it did right here. So this could be the first signal that we might be going down. Like I said, what I do once we break a trend line is look at the top, something like that for a fake out, and look at the bottom, maybe something like this for confirmation. So this was the first signal that might be bearish. If breaking this trend line right here, breaking that to the downside, that might have been the first signal that we might be going down. But it's possible that we could be going in this little channel pattern. So we wait till it breaks to the downside right here. If we break that going down, then that'll be a confirmation that we're going to start heading down. And these orange lines are lines that I've been looking at because they're previous support back here. I think it's on like the 4-hour time frame. So the bodies came down to around 0.153, and then the wick came down to around 0.142. Those are the next two spots that could potentially be bounces. We could bounce on those and start getting up. But as you know, or if you watch my channel in general, let's zoom out. I've also been looking at these Fibonacci retracement levels because we had a big, huge run. We started having trouble up here. Once we start having trouble, then we can, I don't know, we get kind of suspicious that we're going to start heading down. We had a trend line something like this. We broke that trend line going to the downside. I took profits up here, and then I set up the Fibonacci retracement level. So basically, you have a big run, right? Once you start having trouble and you think you topped out, you get the Fibonacci retracement chart tool, drag from the bottom of the run to the top of the run, and then that gives you those levels to watch. And let me circle back to what I was talking about. So we have these levels, and once we break one of them going to the downside, then we start looking at the next one going down. Once we break one going up, then we look at the next one going up. So we just broke this one. So the first time we came down, found support right on that level, bounced, got a nice bounce to the upside, came down and hit that level again and got a nice little bounce again, but we couldn't stay above it, so we broke below it. Right here, ever since right here, I put a limit order down at 10 cents, which is the last Fibonacci retracement level, the bottom of that run. So ever since then, I have had a limit order. Ever since we broke right here, I put a limit order at 10 cents. And okay, so we came up, we kind of broke through it, but we didn't, and we kind of came back down again. Right here, again, this is when I started looking at 10 cents again. When we started to break above it, then I was getting a little not nervous, but when we broke above it, I was less confident on that 10-cent level. Once we started breaking below it, then I started getting more confident on that 10-cent level. So that's another level that I'm looking at. I'm looking at these, like I said, I'm looking at these previous supports right here. Maybe we'll get a bounce on these orange lines, but if we start breaking through the orange lines, then I'm going to be even more confident on that 10-cent level. And like I said, we're in a falling channel pattern. Technically, we're trending down. And until we break that resistance line, this top line, to the upside, then I'm going to be slightly confident on this target up here. But like I said, falling wedges, falling channels, they're technically kind of bullish. All we have to do is just break that resistance. Once we break the resistance, then we can start getting more bullish. And like I said, target from the top to the bottom of the channel to get started with at least. If we could break through this Fibonacci retracement level right here, like I was just talking about, then we would start looking at the next one going to the upside at .248. When we broke over here, started going up, I was targeting .248, or I was thinking that might be a reasonable target. But like I said, we had trouble and we started heading down. The other thing that I've been really looking at is the weekly time frame, the weekly 9 moving average. I've been talking about this for a while now. This blue line right here. If we're below it, if we're below that line, then that's a bad position. If we break above it, then this is a good position. Back here, we broke below it, we broke above it, started testing it, and started getting support on it, and started pushing to the upside. Right here, we broke below it, started testing it to the upside, got resistance right in that area, weren't able to break through it. And ever since then, it's been pushing us down. So what I want to see us do is the 9 moving average come down. I've been talking about this for a while. Maybe we have to go sideways for a while, let the moving average come down a little bit. Then we can ease into it, break above it, then start closing above that line, getting candles above it, start testing it like that, getting support on it, and maybe it'll start pushing us to the upside. That's that's what I'm hoping anyways. Not guaranteed or anything, but we'll see. And we'll see how sideways we go. I'm still looking at 10 cents, but it's possible that we don't go all the way down there. And that's also why I'm looking at these orange lines right here, because they could be possible places where we have to bounce. But I've been saying it for a couple, probably a couple weeks at least, that we probably might have to go sideways for a little bit before we actually really start bouncing to the upside. And this is on the daily time frame. So that's basically what I'm looking at on the smaller time frames and the bigger ones. Like I said, if we're looking at the smaller time frame, we had an uptrend. We broke that uptrend going sideways pretty much right here. Therefore, I'm looking at the bottom, I'm looking at the top. Let's see for confirmation, are we going to break up, or and this will be just kind of like a fake out, or are we going to break to the bottom and continue to head down to these orange lines and or 10 cents? I don't know. But like I said, I've been watching the Fibonacci retracement levels, and these are spots that I've been kind of dollar cost averaging in. The next one going to the downside is 10 cents. The last one that I was looking at was .185, and we broke that one going down. So now I'm looking at .10 cents. But those are the spots that I have positions on, and I'm kind of just dollar cost averaging as we go down kind of thing. Let me know what you guys are thinking though. If you guys liked the video, hit that thumbs up. And if you're new to trading, check out this playlist right here. Help get you started on TradingView. All right, I'll see you guys in the next one.